So, okay, investment in apparel industry. It's actually very, very, very similar to the industry we analyzed last time. So it's retail industry. To be honest, personally, I don't know why they split them, because I mean, if you look at companies, a lot of them they have similar products, they have mixed products, and sometimes it's quite difficult to distinguish which industry this company has to go to, because all of them they're selling shoes, all of them they're selling clothes, all of them selling jewelries, all of them selling bags, and kind of etc etc etc, accessories different. So sometimes it's quite difficult, but at the same time it helps us to understand better companies. So first of all, we know that it mixes with other industry products. Okay, quite simply to understand a structure of the business. So they buy cheap or they manufacture cheap and then they sell at a higher price. Okay, quite often, where do they manufacture their product? And why I'm asking that, because I will have another question for you later on in the presentation, and that's why I want to ask you, where do you think majority of clothing companies manufacture their products? Do they manufacture it in United States or abroad? And if abroad, where exactly? What's your ideas? Online China, that's China, China, China. You're 100% China. And Pakistan, China. So yes, where the labor cost is much lower, that's where the manufacture. And probably the majority of it comes from China. And when we get to one specific company, I'll ask you another question, but not now. So in any way, so majority of companies follow the same business cycle. So you know that Christmas time, it's sale time. Then there is certain kind of quiet on the market. People spend all the money during holiday season. Then they kind of tight. Then again they start spending, etc., etc. And all of them, they're very, very similar. And it's good to understand, because if you invest in a particular company, it doesn't really matter what company in retail industry, and you know that their peer has earnings report 2 weeks in advance, and then before your company announce earnings, you have 2 or 3 companies announcing their earnings. Please do have a look at them, listen to them. Even if you don't have shares in those companies, just look how people react on their reports, and if they see they're positive, if they see that all 3 companies which announce their earnings prior to your company, they produce good results, and they're telling, look, market is great, everyone is spending money, we have better than expected turnover, etc., etc., etc. It most likely will affect your company too, and most likely your company will advance after the earnings. But if you can see that every company prior to your earnings, your company's earnings, they announced, oh, the sales were going down, and like we expect much better, and etc., etc. So their results much worse. So most likely your company will have similar results, and you can adjust your strategy based on that prior. So you kind of can predict what is going to happen. Okay, that's very, very important. So, and that's why we have an ETF like index based on index S&P 500, and we can see how in general it moves, and what you can expect from it. Then we all know it's high competition. It's crazy competition, because it's really easy to open the new store, just rent a small premises, 20 square meters, put some shoes there, put some clothes there, and you start selling. Then a lot of people, they don't have overheads at all. What start to do? They buy from China, they buy from Pakistan, they buy from like any other country, and they start selling on eBay or on different online Amazon like providers. So, and they have no expenses. They sell it from their garage, from their spare bedroom. And of course, for big companies who have presence like in retail shopping centers, they have to pay all these expenses for staff and etc. So for them, the competition comes not only from like businesses, established businesses, but also from individuals. Okay, and we need to clearly understand that. Now, then high level of expenses. That's what I told you. And low loyalty of customers to familiar brands. So if the brand is not familiar, they don't know. Like I'm sure if you go somewhere and you need a new t-shirt, you just go and buy whatever is on the cheapest price if you like it, design or something like that. Because majority of people wear shirts like couple months and they throw it away and then get another one. Very seldom now they try, oh, I want a specific brand and I will go there. So majority of stuff we can buy like that. Okay, of course there are exceptions. Of course there is some type of area in clothing which we choose, like shoes, maybe some jackets, maybe something else, but the majority is like that. Okay, industry. So industry rank is 8. So it's one of the best. So you remember that Value Line has 101 industries and the Apparel rank has 8. So it's in the highest area of growth. So first 10 companies which have potential the highest growth in the next 12 months. But more of that, if we look at Kors, like Michael Kors, we can see it's not the biggest company on the market, but it's not in the smallest. So, and we look, they're kind of about average size of the big retailers. And when you decide to buy or not to buy Kors, you make sure that you have a look at their competitors. Okay, and you can read Value Line report and you can see what companies are like mentioned here, what troubles they have, otherwise maybe what good they have, and it might help you to make a decision. The good thing about Kors, what I found that here our timeliness rank system is especially keen on shares of and the listed few companies, including Michael Kors. So that's a good point for us, right? So out of all companies in this particular industry, they're specifically telling us that Michael Kors has the highest potential for growth in this area. Okay, that's a good point.